Let's focus in on IEX. It's been a pretty strong quarter for the company. Will the high volume growth aid margin expansion down the line? Let's find out. Rohit Bajaj is the ED, Business Development Strategy and Regulatory Affairs at IEX, and now joins in on the show. Thanks so much for taking time out. Let's just begin by talking a little bit about the kind of volume growth that you've clocked in, because that has been fairly encouraging. Do you think that we can see a further margin expansion owing to the operating leverage?
Yeah, good morning. So this last quarter was very good for us, Q2, where we registered close to 15% growth in overall volume terms. And after that, in the month of October, we have seen huge demand increase. So YOY basis, overall country's demand increased by about 22%, and we got lion's share of it. Our volume also increased by 20% in the month of October. So all in all, if I talk about first 7 months, we are at 12%, and going forward, as the supply constraint will further ease out, because November, December, January, February, these are generally the months where we have large supplies coming in. Not all the states are drawing, and this is a time when prices go down a little, and then states start to take advantage of the market. They leverage this low price electricity which is available on the exchanges and try to replace their costlier supplies. So we expect that going forward, we should be able to scale up this growth further and take benefit of the supply constraints which are easing out.
Well, you already shown a very interesting 200 basis point kind of expansion in margins this quarter. If the volume outlook from here on is good as you are sharing right now, would it be coupled with higher margins as well, or they'll roughly be around current levels?
So margin, we are at very high level already. So we believe that it is going to be at the same level or little bit on the positive side, because you know that the expenses are more or less fixed, and whatever increase in volume is happening helps us improve the margin. So not too much expectation on that front, but yes, volume growth will drive higher profitability and higher margins.
Margins, are they a function of the volume, or irrespective of the volumes you do, margins are going to be independent of that?
Margins are definitely function of volume. It is driven by volumes here.
There is a pattern which we've always seen, that winter demand is always higher than summer demand. Right now, the merchant power prices have really gone through the roof. So at a time when we are looking at uptick in electricity demand and big uptick in merchant exchange pricing, how will that change your landscape from last year versus this year?
Yes, so it's not always that winter demand is more than summer demand. Generally, what we see, summer demand is little on the higher side, and then monsoon demand is also high depending on how good or bad the monsoon is. Winter season is particularly where we have demand coming up only during the morning hours and something in the evening hours also. Largely, if you see on an average, this demand is not very high. So what happens in these months is normally we see the prices going down. So till now, our average price at exchange is about 5.5 rupee. November price has come down to close to 4 rupees, and we expect prices between 4 to 5 rupees in months to come. So when the prices are on the lower side, state distribution companies, they try to optimize their power procurement cost. What they do is, they have today, as we know, majority of the power is tied up under long term. And when they have so much capacity coming through or so much energy coming under long term, they identify which is the costlier one. So they replace that costly power with the exchange procurement, and which helps us increase our volume. So this trend we expect going forward will help us gaining in the volume. Though demand overall basis, it would not be very high. It would not be as high as summer month, but the demand would be there, and it will help us get more more volumes.
I'll take the clock back, and I have the number for Q3 FY22, and I'm looking at total volumes. That was 27.7 billion units. What you've clocked for the quarter gone by 16.5. It's almost a 30-35% drop in what you clocked, let's say, 2 years ago versus what you currently have clocked. Why is there such a drop?
See, 2 years back, what we are referring to was the COVID time, and this was the time when overall demand in the country was very low, and the prices were also at the lowest level. We have seen historically the lowest price during the time when what you are mentioning. And this is the time when all the states, left, right, center, they were replacing their power and we were getting huge demand. Subsequently, what happened when all of a sudden we have seen increase in demand across the country, there were certain supply side constraints also emerged. You may be aware that imported coal prices were at all-time high level. The gas prices were also at extremely high level. So there was not enough supplies available. Last 6 7 months, or I would say last about a year, we have done a lot of groundwork within the country. State government has taken many initiatives. Today, all our imported coal-based plants are running. Today, coal production has increased by 15-16% in Q2 particularly. Overall basis, it has increased by 12%. And with all these things coming in place, we are getting more and more supplies. So that the comparison probably is not right, because those were 2 years when we registered almost 30%, 25 to 30% increase in our volume. Last year it was flat. This year we are expecting 15 to 20, more than 15% increase in volume on overall basis, on the annual basis. H1 it was already 12% up. Q2 October particularly it was more than 20% up, and we hope that this trend will continue. We are working to ensure that this trend will continue for coming months also.
Rohit, you are also looking at introducing longer term contracts, 11-month contracts. Have you filed them with the CERC? What's the update there?
So very shortly we are going to file it. Our internal preparation has been done. So till now, let me also explain you what it is all about. Till now, we have contracts which where the procurement can be done up to only 3 months. But there is a requirement in the market, particularly distribution companies, where they want to do some advanced planning and then buy power in advance to meet their seasonal requirement. Let's take example of Punjab, Haryana, all these states where they have agriculture requirement coming starting from June. So they want to do procurement somewhere in January, February. So 3 months window that we provide them is not sufficient. So now the new regulation has come. This is GNA regulation, where you can take open access or you can schedule power up to 11 months in advance under short-term market. So what we are doing is taking advantage of the regulation which is there, which is very market-friendly regulation. We are going to apply very shortly, and we are hoping that by, let's say, January, we should be in a position to launch this contract. And if we are able to do that, then entire next year demand we should be able to cater to. Because the procurement cycle starts somewhere in January, it goes up to March. And if we have right kind of 11 months contract at that point in time, it should help us in scaling up our volume in this bilateral market also. This is going to be a new segment.
All right, good to have you. Thanks so much for taking time out and joining in. That's the word coming in from the management of IEX. They are talking about how their volumes will grow further down the line. Margins as well will be what they clocked in around Q2. And as of now, they're not expecting any major expansion when it comes to the margin picture. IEX are nudging the levels of about 140.